Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, I want to talk to you guys about why I believe Tesla is a great company, but the stock price remains overvalued, especially after looking over this brand new Q3 earnings report. Okay? And apparently, many investors agree with my sentiment here because the stock is down almost 5% in after-hours trading at the time of recording. So, of course, at the end of the video, I want to talk to you guys about price targets as well, but let's quickly go over the structure of the video and everything we want to touch on prior to talking price action. All right, first things first, we have to cover the contents of this earnings report, okay? Not a bad earnings report by any means, but it wasn't a great earnings report either. And right now, Tesla's share price and the market cap of Tesla reflects greatness, okay? So we'll read over this again, not go super deep on the earnings report itself, but just the necessary information for you guys. And as always, if you guys want to know more, if you guys want to look deeper into the numbers, just go Google it, because that's easy enough for all of you to do. Okay, so we'll kick it off by reading over this. This was simply just to show you guys after hours trading, down about 5%. Probably going to close out the week with some blood, but hey, you never know. I've seen this happen many times in the past, and the stock rips the next day. So if you guys happen to be watching tomorrow, let me know if Tesla is down or up in the comments below. Next, I want to talk to you guys about the primary reason that I still do, and always have, I shouldn't say always have, but for the past at least 6 months at this point, believe Tesla stock is overvalued, and that is Tesla's PE ratio. So in these two tabs, I have Tesla's PE ratio and Meta's PE ratio. Very different companies, I understand that, but I just want to put things into perspective in regard to their PE ratios, and not just two random companies' PE ratios. These are two members, I guess not members of the FANG, but two of the larger companies in the entire United States, in the S&P 500, in the NASDAQ. Both growth companies. Again, Tesla, major growth over Meta at this point in time, but I do want to compare their PE ratios because it puts it into perspective. All right, and then to close it out, as I just implied, we got to talk price action because I do think Tesla has one more wave to the downside. But hey, once Tesla bottoms out, I do think that could be a good signal as to when the entirety of the markets bottom out. And when I say that, I mean like the S&P 500, the NASDAQ, the major equity indices bottom out. Because I believe Tesla is one of the two remaining generals standing. The war isn't over until the generals are shot. And I think Tesla is one of those two. And I'll talk about who the other one is over the course of this video as well. Okay, so that is the contents of the video. To kick it off though, I gotta read over the write-up on Tesla that I sent out to the newsletter group just before I sat down to record this video. So we'll read over this, really just summarize my thoughts on Tesla, on the earnings report, on why I think this company is overvalued, and then we'll go over everything else where I can expand on my statements here. Okay, so Tesla, well team, the Q3 numbers are in, and we called the market's reaction correctly. Tesla stock was down over 5% at one point after I was trading and has settled around minus 2.75% as I prepared to hit send on this newsletter. Again, at the time of writing, we're back down about 5%. Okay, futures are down overall. And so hopefully you guys have some puts on deck going into Thursday, Friday trading sessions. I know we do. Okay, so the numbers in this report aren't bad, but they aren't great. And the valuation, I just said this, of Tesla stock reflects greatness. Okay, you guys, so that's important to understand. A company and a company's stock price are not the same thing. Tesla, still doing good, but they're not doing great, and the share price and the multiple reflects greatness, which again is the PE ratio that we're going to be discussing in a little bit. Tesla's PE, price to earnings ratio, is still sitting around 80 even after its recent correction. And we've discussed many times the historical average PE ratio for a company within the S&P 500 is 25. So that's a little off, right? 25 is the average. Tesla's sitting around 80 even after its recent correction. Tesla's growth rate is far more impressive than most of these companies, of course, but in this macroeconomic climate, there is no reasonable way one can justify an 80 price to earnings ratio. Okay, so again, macroeconomic climate, I do just want to reference this as well. Portfolio is struggling today. Tomorrow, the next day should be much better. But I stand by my macro thesis. The dollar remains strong. The Fed remains on extreme offense. The likelihood of a black swan event remains elevated. And most recently, I think that these first few days of Q3 earnings have set the bar way too high for those to come. Again, banks set the bar very high. Tesla, I think, is where it pivots, okay? This earnings report kind of woke people up. Again, banks, Netflix really created an unrealistic perception of Q3 earnings, especially because of just the backdrop of how much many of those stocks have corrected prior to this. Tesla still hasn't corrected that much relative to many of the other stocks, okay? So I do want to read over this as well, talk to you guys about the S&P 500, but I'll save that for a little later, okay? We've been saying for weeks that Tesla and Apple are the two remaining generals in this market, given the fact that their valuations aren't reflective of this recessionary climate. The war isn't over until the generals have been shot. If you guys have been watching for a while, but more so, I guess, subscribe to the newsletter portfolio group. If you guys are members of the portfolio, you would have heard me say this. I've said this at least, probably 10 times over the past month, but it's because it's a great analogy. Obviously, it's a bit morbid, but you guys get what it's saying. The war isn't over till the generals are shot. By this, I mean like the S&P, the NASDAQ, again, the major equity indices, the market correction, the stock market crash has not and will not conclude until the generals are taken out, okay? The war isn't over until the generals are done, okay? Until the guys in charge, until the top dogs are out of the picture or have, surrendered, okay? And these two generals are still standing. Again, most stocks have corrected significantly more than Apple and Tesla, even though it feels like they both fallen hard. If you look at the majority of the markets, these two, even the other FANG stocks like Microsoft, not so much Microsoft, but Amazon and Netflix. Netflix before their earnings report, just yesterday, I think, was below its COVID crash levels. Okay, so it fell below the lows it saw during that pandemic black swan event, which is insane. Okay, so let's talk a little bit. I'll talk about technicals here. We can go over the earnings, then I'll close it out by expanding on those technicals on the charts. Okay, so we've been talking a lot about cyclical mean reversion over the past few months. This is where a stock retests the prior high of the macro long-term bull market cycle. Tesla's all-time high was around $70 in February of 2020. We're still up 235% from those levels, and I don't think we go that low, but I do think we go to one of those. I do think that one of those 2020 highs will be retested. And I will say that I do think, and I'm very confident in the fact that Tesla sees at least $160 to $170. Give that a little buffer prior to seeing new all-time highs. Okay, so that's my thoughts on Tesla. Again, we'll expand on that at the end of the video. I'll also talk to you guys about what I'm seeing on the S&P 500 and why I do think that will translate to more downside in Tesla and Apple and pretty much the entirety of the markets, because the S&P 500 really is the market. But let's talk these Q3 earnings first. But before we do, you guys, if you want to know how I trade on a daily basis, if you guys want access to my daily newsletter, which is what I'm reading over right now, we got the trade alert, we got the price targets. This is the price targets. We cover all these names that you see here just in today's newsletter, but a lot of growth stocks are covered on a day-to-day basis as well. And I'm holding puts. For full transparency, I did have a short position on Tesla going into today's earnings report. So the way things are looking, again, I've seen things down in after hours and skyrocket the next day. I've seen things shoot up in after hours and tank the next day. So we'll see. Again, you guys let me know in the comments down below what ends up panning out here. But personally, I think these puts are going to absolutely print. And I hope you guys who are members of Waves Capital, who are members of the portfolio group, maybe got in with me on these, because they should do pretty damn well tomorrow. So cheers to you if you did. If you do want to know, again, how I trade on a day-to-day basis, if you want my daily newsletter, it's a deal, you guys. It's $15 a month, or $40 for every 3 months, or try free for 7 days and then just cancel if you don't like it. But I do really believe you'll be sticking around. So first link in the description box below. If you guys want to join the winning team, if you guys want to join Waves Capital for real, you get everything that this little box right here says. Yeah, I'll see you guys in there. Welcome to the winning team in advance. And of course, if you guys are part, please show some love in the comments below if you guys have been enjoying the newsletter. So plugs out of the way, you guys. Let's cover these Q3 earnings, move on to the PE ratios, and then close it out with a little expansion on that price action. Okay, so Tesla comes in light on revenue, beats on earnings, CNBC Pro. Key points: Tesla reported $1.05 in adjusted EPS, earnings per share, ahead of expectations of 99 cents, so solid beat on EPS, which is impressive, honestly. On revenue of 21.45 billion, lighter than the expected 21.96 billion. So, pretty not super significantly lighter, but definitely lighter revenue than expected, and that's really the issue here, you guys. Is the fact that Tesla's revenue has just gone pretty much parabolic, like Tesla stock. Like you see Tesla stock again, just gone parabolic for the most part over recent years. But you're finally seeing Tesla plateau. And that is a very, very alarming sign, considering Tesla is priced as a hyper-growth company. Again, Tesla is a hyper-growth stock. Tesla is, I won't say hyper-growth stock. I will say high-growth stock. Tesla is a high-growth stock. But the stock trades as if it's a hyper growth, almost small cap stock, okay? Like the ones we usually talk about. So here are the results. Earnings, again, $1.05 versus 99 cents and 21.45. We really just talked about that, so no need to expand on that. But those are the baseline numbers, you guys. Again, beat on EPS is impressive. That displays proper capital management, but the fact that revenue is looking to have plateaued in the short term, I'm not saying, you guys, that 2, 3, 5, 10 years out from now, revenue will not grow from this point. I don't think Tesla's growth is over by any means, but when it comes to Q4 and Q1 of 2023, that's really what the market is currently trading on. That's what the market wants to price in. 10 years from now, that's really not what the market's pricing in, especially in this recessionary, macroeconomic, kind of dismal, uncertain climate. We're pricing in 6 to 12 months, okay? And the next 6 to 12 months, based on what Jamie Dimon of JP Morgan, Jeff Bezos just today in an interview, pretty much every CEO is calling for a recession in the next 6 to 12 months, and that's what the market's pricing in right now. And I think Tesla, which has just done so damn well over recent years, is finally, it's catching up. And again, I built my career off trading cyclical bull markets, right? Big, huge, parabolic, manic, emotional, irrational rallies, okay? I've never seen a rally hit the next phase of the cycle. Bitcoin's the perfect example of this, and that's why Bitcoin at like $18,000 to $20,000 is appealing to me, because that was the 2017 prior high. So that's the same thing that I feel almost needs to happen here. Again, I don't think Tesla comes down to, and I'll just do this now, I guess, you guys, and then we can talk about PE to close it out, but I do think that Tesla does not come down to $65. It's possible, but extremely, extremely unlikely. That said, I do, however, believe that one of these levels will come into play, either this orange one right here or the red one. I think the red one around $1.20 is kind of like the worst case scenario for Tesla, but I wouldn't be surprised, honestly, in the slightest, if we do see Tesla see $1.20 over the next 3 to 6 months, maybe, because again, you still price in the future revenues and future outlook, which is why guidance and earnings report is so important. But I do think that a 160 to 175, I guess like 165 is where we're exactly on this high. So $1.60 to $1.70, again, give it a little buffer there. None of this is ever exact, but I wouldn't be surprised in the slightest. And I actually do think it's way, way, way more likely than not that Tesla does see $1.60 to $1.70 prior to seeing new all-time highs. Like, I think Tesla is guaranteed to see $1.60 prior to seeing $4.20. Okay, so when does this happen? I do think like multiple trend lines, and this is a conservative trend line right here. Multiple trend lines do coincide around $1.60 at the end of this month, so that could happen fast. Get a quick price range on this. Price range from current levels in after hours, so 210 in after hours trading at the time of recording, down to $1.60 is a further 20% correction. Over the next 2 weeks, 20% for Tesla. That's not crazy. That's honestly not very crazy at all. So that's what I'm thinking, you guys. Please let me know in the comments down below what you're thinking about Tesla. Are you short? Are you long? And let me know why as well. Let's close it out with the PE ratio. And again, Tesla currently sitting at a PE ratio, I guess, of 71.1. Maybe that's after the hour. That's following the after hours price action, I'm assuming, because this is updated. But most, I mean, if you look at CNBC, the PE ratio for Tesla, what is the PE ratio? PE is at 79.95. Okay, so yeah, 80 PE ratio. We'll call it an 80 PE ratio. This might be a little off, but 80, even 70 PE ratio. 25 is the historic average for a company within the S&P 500. Meta, which again is not going to grow at the same scale as Tesla. Okay, that makes sense that Tesla trades at a greater PE multiple than Meta because they are going to grow at a far more, even you could say exponential pace. Okay, Meta, although actually I think with the metaverse, we're definitely far out. We're like 3 to 5 years out from actually even starting to scale the metaverse, in my opinion. Decentraland, Sandbox, everything we've talked about on this channel, what Meta's doing is going to work eventually, but it is early, and it really was just kind of like emotional, the story stock market, as we call it. Meta has a while. I do think the fact that they're trading at a PE ratio of 10 is absolutely insane. Or 11, I guess. We'll round up to 11. But again, you guys, a company like Meta, which does still print cash, print profits, and really does probably have a bright future ahead of it with the metaverse stuff as they've rebranded to. Again, going to take a while, a lot of growth. They're trading at an 11 PE ratio. Tesla is trading at a PE ratio of 80, or even, we'll say 75. 75 at the time of recording, which is still well above the historical average of 25. And I do think that even if Tesla, which again is a hyper growth company, it needs to come down at least to, and these are just kind of winging it numbers, like even 50 is high, but 50 is a little more understandable. 70, 80 is ridiculous. Just last week, it was trading at like 100. So again, you guys, in this macroeconomic climate, in this macro backdrop where everything is kind of just going wrong and really the outlook is very dismal, I do think that, there's just more downside ahead. And again, just looking at this chart, Tesla's still up 235%, or after hours trading, 230% from its February 2020 high, like all-time high, after ripping. Tesla in September of 2019 was at like 15, 16 bucks. So it's crazy to think about how far we've come, and just really looking at it from a macro view, from a bird's eye view on the charts, does help to put it into perspective. And it really does look ridiculous if you have any background in technical trading and playing cyclical bull market cycles. Okay, so that's the video, you guys. Again, let's close it out with this. I still believe the markets will be closing out the week with some blood. So again, October 19th at the time of recording. Got 2 more days, Thursday, Friday. Let's see what happens here. Although I could absolutely be wrong given the extreme coin flip nature of recent price action, I'm keeping money on this scenario. Okay, so S&P 500 right here, 5-minute candle, super short term. Let me know if this plays out, you guys. Good old head and shoulders pattern looks to be playing out. Left shoulder, head right here. Right shoulder, maybe go sideways a little bit, but I do think we come down by the end of the week. And of course, S&P 500 is just the conglomerate of the 500 largest companies within the United States. Tesla, Apple, a few of the large ones, and I do think that these two will be coming down to close out the week. And really going into next week, because Apple reports on the 27th, I think they're going to really fall short as well. So I think we got one more flush coming. I'm excited that and thankful that we over at Waves Capital are prepared for said flush, but I'm also excited to put some of the profits from our put options into some longer term call options, because that's what we've been doing successfully for the past month, and it's been awesome. So again, if you guys want to join Waves Cap for real, if you guys want to join the newsletter portfolio group, first link down below. Any of these pricing plans, completely up to you. I'll see you guys in there. I'll see you in the comments down below. Until next time, always remember, take action, make waves. Peace, team.